Thank you for watching Decision Critical instructional videos. In this tutorial, you will learn the main ways of adding expenses in Decision Critical. In previous videos, you might have seen how to add some expenses, including the salary expense, the tax expense, depreciation expense, and so forth. This time, we are going to discuss some more other type of expenses which are product-driven, staff-driven, equipment-driven, and standalone expenses. Right now, we are on the scenario building screen of a company called Machine Trading. So let's start and add expenses. First, we have the product-driven expense. These type of expenses are triggered by purchase or sale of an item. When an item is purchased, produced, or shipped, you have a chance to attach an expense to it. And in this case, we are attaching a freight in. Here we put expense rules, which are governing the timing and accounting treatment of an expense event. And this is calculated either as percentage sales or purchase, or can be set to a fixed amount per unit. VERT already inserted. The activity group determined the categorization of this expense on the income statement. Freight out, which is on shipment. And we have lastly royalty, which is also on shipment and calculated as a percentage of amount sold. Now you can see that our product-driven expenses are appearing here as well as in the unit economics. The second type of expenses is the staff-driven expense. When you add an expense to a position, it is applied automatically to all employees in that position. These expenses are incurred based on employee headcounts. Uniform, which is a one-time expense on hiring, and monthly expenses include transportation, mobile phone, and meal. We also have another one-time expense, which is a training cost, which occurs on hiring. Back to the resource card window, we can see the added staff-driven expenses. The third type of expense is the equipment-driven expense. These expenses are similar to staffing ones, but are incurred based on machine counts. Let's add some equipment-driven expenses. Maintenance, which is an example of a monthly expense. Matching on, also a monthly expense. And inspection, which is a one-time expense. These can now be found in the fixed assets resource card. The last type of expenses is the standalone expense. These are fixed expenses that can be added manually under the organizational structure. These can be added directly into the appropriate department by just clicking on the expense icon. Insurance, which is a yearly expense with an amount per payment including VAT and specific beginning and ending date. Company retreat, which is a custom expense with an amount per payment in September, in February, and in April. Now all our expenses have been successfully added and could be seen in the income statement reports. The product-driven expense, equipment-driven expense, staff-driven expense, and the standalone expense. Well, this concludes our tutorial on expenses in Decision Critical.